Hi all, this is Ashish Kyal here. Welcome again to Elliott Wave News channel by Wave Strategy Advisors. And it has been an eventful week after the budget session, and the way prices have moved. So it becomes important to understand the overall trend of the market and what can be expected next from here on, and what is the pattern which is under formation. So a very important week has been behind us, and an important event I would say, because there has been a lot of waiting that was happening. What is going to be in the budget and how markets are going to move post the budget. An important thing to observe is that, as far as I understand, the budget was more on the populist side, and there has been no logical explanation on why such a strong rally after the budget was over. So, and trust me, this will happen every now and then, because markets continue to move the way they want to move, and events only result into a short-term, probably random movement or short-term spike, and eventually the overall trend or the pattern continues. So this time it was no different. If you recollect the video from last Friday, when we explained about GAN analysis, when we explained the pattern that wave A was over and wave B is ongoing, and the way GAN square of 9 time helped us to capture that 2 or 3 days of probably top. It worked out pretty well, and the price have span out exactly the way it was expected to do. So before the budget, after completing wave A at the top of somewhere around, I think, 8700 levels, after completing I think 8670 was where wave A completed, and then after that wave B was ongoing, and wave B low was formed exactly on the budget day. As soon as the budget was over, then we saw a very sharp rise in the form of wave C, which just started. As soon as price took out the level of 8600, 8620, we went out and we give buy recommendations or buy calls on our on stock tips to our clients on Nifty, and from there it immediately continued to raise higher towards the level of 8700. It surpassed that level as well. So that 1 hour of movement which happened after the or 2 hours of movement which happened after the budget was so euphoric. I mean, it resulted into a very sharp rise, and it it felt as if there is no tomorrow for the markets. And then when the next day opened, Nifty just consolidated, and the stocks which were the top gainer on the budget day probably became the top loser the very next day. It is very typical and a peculiar behavior, where the major gainers, probably like IndusInd Bank and other few stocks from the metal space, from banking space, which were the top gainers, did not perform or are still underperforming. So that clearly shows the rally has been rotational. It has been probably across, but still it is not in participation from all the stocks. So what is happening in today's rally or in yesterday's rally? It was more from the pharma and the IT space which outperformed, and that has been dragging the index probably not even higher but sideways. And now, and on the budget day, it was probably the banking, the auto, the other space which was outperforming. So that's a very important observation. Secondly, it was expected that wave C is going to start on the upside as soon as B should be over, and wave B retraced exactly 38.2% of wave A and started on the upside. So the pattern was very clear, and the event only result, I would say, event did not even result into anything typical. And we were expecting a 200 points move on Nifty between low to highs, and Nifty behave exactly as per that. There was nearly 200 points movement on the budget day, and then a sharp up move with a close near the day's high. So that was very important aspect. Next, let me show you one chart of Nifty along with an important exponential average that I have put in, because that will give some clarity on what to expect next from here on. Over here on the screen, you can now see Nifty chart. It's an hourly chart, and we can very clearly see that the red moving average which is applied is probably a 40 period moving average. If someone thinks why 40, because 40 has been working absolutely well in order to provide important support to prices or resistance to prices. So there was only a minor whipsaw around here on the budget day, and then price reversed back above this average. So this is a very important average, I would say. So 40 is working well. So there is no magical number like 20, 50, 100, 200. You need to apply moving average that works well with the market. There has been a lot of misconceptions that you apply the averages which are standardized. There is no such magic number. The averages which provide good support or resistance should be applied. So over here we are applying 40 period moving average, which is a 40 hourly moving average, and you can see that the move on the downside, as we explained, was wave B, and right now we are in wave C. The in-depth detail of each and every count we will not be able to explain here. Those are given in our daily research reports, and price are going higher, but it has been probably more on the drifting side since past 2 days. If you check, there has been drift and there is no strong momentum after just 1 day of buying. And that 1 day of buying has created a lot of euphoria for people to expect 9,000 plus levels on the market. But what I look at it from the very basic perspective is probably channels that has worked extremely well, is probably going to work well even this time. So this is the channel, I would say, which has been working. The red channel, I'm connecting the lows here. I'm connecting lows of wave X. What is wave X? I'll not be able to explain now. So this is a 0x trend line, and this 0x trend line, I'm drawing a parallel to that. This is the extreme level. So if you connect the extreme level and the parallel, so this becomes the zone. So this is the resistance zone on the upside for Nifty. So if price have to move higher, the resistance zone has to be crossed decisively on the upside with a very strong momentum. So we need near vertical rise for price to break above this zone, and it's very rare to see an upward sloping channel getting broken on the upside. It's not very often, it's a rare scenario. So probability of that happening, I would still keep it low. So for nevertheless, remember one thing, this is an upward sloping channel. So with each passing day, the room on upside is going to increase. As of now, the resistance comes to around this zone, and for strong momentum, if Nifty still manages to cross above this zone with very strong momentum and broader participation, then yes, we will be expecting further higher level. But for now, I'm going to be little cautious, which is again a contrary stand to majority who are expecting 9,000 plus. I will be little cautious as of now, and if there is a break below the important low levels, which we will mention in the report, then yes, the price can again retest the channel support, which is around 8,600. Now that move, if it comes, is going to surprise and catch majority on a surprise note, because the movement of 1 day was sufficient to turn measure everyone probably bullish. So what to expect and what should be the trading strategy from here on is it's not a favorable risk reward to go long now. The target looks very minimal and the risk looks pretty high. The strategy should be probably if price goes on the downside, the strength with which it is falling, if it is a very strong down move, then it's better to avoid creating long positions. But if it is an overlapping down move consuming more of time and less of price, then yes, the overall trend will still remain bullish for buying on dips. So where we are right now is at a very important juncture. We will keep on updating in our daily research report which are the crucial levels to watch if you want to go long or probably go short. And I think we should start getting good trading opportunities again from here. We got one very good opportunity as soon as 8,600 was broken, and we recommended buy to our clients. And now probably we are waiting for good trading opportunity from here on. So in a nutshell, Nifty is expected to probably show some distribution right now, which is near the channel resistance. It can continue to drift higher. Nevertheless, keep a watch on the upper resistance of the trend line and the support levels. And that's I think once the support breaks, then we are in for some few days of correction at least as of now. That's it from my side. And we are just an announcement to be made. We will be conducting training on Elliott wave, Neo wave time cycles, and I am also going to introduce GAN analysis using square of 9 for timing the market. It's not going to be exhaustive GAN discussion. It's going to be GAN analysis for square of 9 for timing the market. As long as we can time the market well using Hurst time cycle and GAN cycle, that should be it, because for price we have Neo wave to cover. So 18th and 19th March there is a training on this subject in Mumbai. Anyone who is interested to attend the training can please visit the website wavesstrategy.com or give us a call on 99204 2202 or write to us at helpdesk@wavesstrategy.com, and my colleague will explain about what this 2 days of training is going to cover, and it's going to be very exhaustive sessions on advanced Elliott wave, Neo wave, cycle analysis, and various aspects from there. Thank you very much, and have a wonderful weekend ahead, and pleasure as always. You can watch this video again at 5 p.m. on the website, and stay tuned, keep in touch, and we are expecting some huge moves to happen pretty soon. Thank you.